In this video, I will show you the stocks that you should absolutely avoid to compound your wealth in the long term. We are talking about stocks that you won't even touch with a stick. Stocks that you should avoid absolutely because they have been terrible investments. There are a lot of risks if you invest in these stocks, and that's how you can make stupid mistakes. So here, this is for your financial future, protection of your capital, of your wealth. Avoid these kind of stocks absolutely. In case you don't know me, welcome to this YouTube channel. We are a channel about stock picking. We are stock pickers, and I've been investing in the stock market for almost a decade with a performance of 25%. So here the goal is to make you a better investor. The first stocks, the first kind of stocks you should absolutely avoid is for sure the meme stocks. This is obvious. I know what you're going to sell. The meme stocks. We are talking about GameStop. We are talking about AMC. We are talking about, I don't know, Virgin Galactic. We are talking about the SPAC. We are talking about all the things that went up a lot during 2020, 2021. And even serious investors started to buy these meme stocks because of FOMO, because they went up 500%, and you think that I can't be left out. This is exactly, even serious investors, this is what they think. They think that maybe this time is different. I'm telling you, you will see many opportunities in this meme stock area because you will have a driven CEO, enthusiastic CEO, passionate CEO, with a visionary. This is the next Steve Jobs. Most of the time this doesn't happen. Most of my friends that invested in meme stocks lost everything, like 90% lost. This is as if you lost everything. Avoid this at all cost. At all cost. Don't even put 1% of your portfolio. Don't put anything. This is too much stress, and it is not worth the reward. The risk reward is definitely not there. And if you invest in this meme stock, there is a high chance that it goes down 50% within 1 year. I mean, you can check on the internet. Check the performance, the average performance for a meme stock since 2020. They go up a lot when there was free money, NFTs, like in a crazy market full of euphoria in 2021, and then back down, and down like 97%. They lost everything. Don't try to be smart on this one. Don't start to catch a falling knife because it's too hard. I mean, in the stock market, you have 50,000 opportunities. You can buy Google, you can buy Facebook. We are talking about great businesses. Amazon. Why should you bother investing in meme stock? Because you are greedy? I mean, if you're greedy, you can buy AI stuff, but don't touch meme stock. Don't touch meme stocks. Avoid this absolutely. That's how you will avoid many mistakes, I'm telling you. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The second, let me check my notes really quick. The stocks you should avoid, or we are talking about bad companies in bad industries. There are businesses that are in a difficult industry. What is a difficult industry? It's an industry where on average people don't make money. It's an industry where companies struggle. When the return on invested capital are cyclical, are low, the margins are low, the industry is dying. For example, I have this example in mind, the newspaper industry. So like newspaper that you can read on the subway in the past. We are talking about a dying industry. Now everybody watches the news on their phone or on TV. They go on Twitter, on X, but we don't read paper anymore for the news. We are the new generation, and these businesses are all dying. This is a bad industry to be in. You can feel very smart if you invest in these ones because you are a contrarian. Congrats. On average, this is a terrible way to invest. Terrible ways to invest. So let's say bad industry and bad companies. BC. We are talking about bad companies. Now let's do some name dropping. Sorry for the shareholders of these companies. Intel, Boeing. These two companies are bad companies because Intel has been struggling for years. They are getting eaten by competition, and seems like there is no floor on this one. The stock is going down and down and down because revenue is going down and down and down, because earnings are going down and down and down, and seems like this is trading very cheap and seems like it is still going down. Another example is Boeing. First, the airline industry is very hard, very cyclical. They don't make much money. So if you build some planes, same thing. This is a capital-intensive industry, so you need a lot of costs, very little margins. So in a normal scenario, you don't make much money. You have to reinvest, build new planes every year so that you keep up with competition, international competition. And this is a very difficult business to be in. But Boeing is a terrible company for all the scandals that you guys had in the US. In Europe, I don't think we had the same issue with our Airbus, but most viewers are from the US for this YouTube channel. And yeah, Boeing is having some great difficulty, engines that explode or planes that are crashing. I mean, terrible stuff. You want safety first for a plane company, and seems like this is not their priority. You have many missteps of management, and management is struggling. I've seen a documentary on Boeing. Seems like I personally would never invest in Boeing, regardless of the price. And Boeing and Intel are perfect examples of bad companies that are badly managed with bad financials, no growth. You have a decrease, you have some losses, heavy costs. You can say whatever you want, the costs are immense for these companies. So if you combine these bad companies with bad industries, imagine a bad company in the newspaper industry. I mean, you have a dying industry with a dying business model. That's absolutely too hard with difficult times. So they are not companies of the future. This is not pure innovation. We are talking about companies you should absolutely avoid. So avoid the meme stocks, absolutely, because you can get wrecked, you can get destroyed absolutely, and you lose 90% of your portfolio. And you want to absolutely avoid bad companies. Don't try to be smart. Don't try to catch a falling knife, because I've seen many people on YouTube buying Intel, and then the guidance is decreased, is lower revenue, lower earnings. Okay, they buy again, but the company is deteriorating again and again and again. On average, bad businesses stay bad. On average, good businesses stay good. So if you have a struggling business and you see no light at the end of the tunnel, that is very bad. That is very bad, and it is very likely that Intel and Boeing will continue to struggle in the coming years. I mean, I see no change for these companies. I see no change whatsoever. So don't try to be smart and think that it will be a turnaround play. Maybe you have some examples of this in your mind. They exist, but on average, it's a terrible way to invest. On average, it's a terrible way to invest and a very stressful way to invest. Imagine the stress of having a portfolio of 3 stocks of GameStop, Intel, Boeing. The stress is immense. Maybe you will be comfortable buying them, but what after 6 months? And you lose your portfolio. What after 1 year, 2 years? These are not good companies to hold for the long term. We are a channel of stock pickers. We want to build a strong portfolio with great companies. And you want to absolutely avoid these kind of stocks. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.